G'day everyone, welcome back to Pete's Investing, June 14, 2023. This is the US dollar DXY update. You can see here on a weekly, we're broken up into a neutral positioning, likewise broken down into a neutral positioning on the daily. So avoid long or short positions, but we got a bit of a divergence which played out and it's still declining. So we'll see where this ends up on the hourly chart. Looking at the weekly first, we've got the triple moving average of the price chart and the triple moving average of the CCI 150. They're not aligned, so it's giving us this neutral signal. When they are aligned, it gives us either a bullish or a bearish signal like it was back there during those weeks. So avoid taking trades on the hourly and if the weekly and daily don't align. On the daily, likewise, we're in a neutral position. Now you'll notice we did draw a bullish divergence on the CCI versus a bearish divergence on the price chart, and so far that hasn't eventuated. There is some potential and possibility, so I'll keep that in there in case it does move to the upside. But looking at the hourly, it may actually break lower, so we're going to see what the key levels are. So on the hourly, those key levels are the 61%. If it drops much lower than that, then we're going to see probably more of a bearish outlook for the US dollar. But you can see here during this period, we did draw a bearish divergence on the CCI versus this bullish divergence on the price chart, and these divergences are independent from the weekly or daily divergences. So you can see there the CCI continued down and the price did break below that channel which we drew in that divergence range. So once it broke below there, our initial target area was the 23% to the 38%, and it hit that very early, bounced up, and our secondary target was between the 38 and the 40%, and actually came back down there in the last few hours and hit that range as well. As I said in the beginning, a key area will be the 61%. If it breaks below that, then we're going to see more bearishness on the US dollar. So at the moment, it may well bounce to the upside and possibly reach our daily divergence targets in the coming days or possibly weeks. And also up here, I've got this, if I zoom out, I've got these back tests, a bearish back test and a bullish back test. And again, we don't use our stop losses. We average down when the price goes against us in this bullish scenario, for example. Likewise, during the price when it was accelerating, we average down on the bearish scenario. And a way to avoid those average downs, that's why I always mention, you must always trade with a weekly and a daily when they're aligned. So you can see back here when going long, you would have stopped going long when the price started dropping off. And you can see there as the price dropped off, and that was October 22. So October 22, there were no long positions during that period. Likewise, October 22, no long positions, only bearish conditions. And before that, you can see there primarily long positions, and primarily long positions on the weekly. Hence, only trade in the direction of the weekly, daily, and when the hourly align. So to understand this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.